What's up, guys? Been a while since I made a video. I am still trading, in case you're wondering. Typically this time of year it does slow down, July, August, but this year stayed pretty active, so I continued to trade. Things are going well. I'm still doing the live sessions, in case you're wondering. Normally at this time I wouldn't be. But things have been good, so I'm going to keep going. And maybe it'll last through August and we get to September, and September is normally fine anyway. So if you're learning my method, trading my method, there's a recent setup that I took on Thursday. I'll highlight, and there was something tricky about it, so you may have missed it. So it's something to look at. But this was the last trade that I took in the live session on Thursday. I also took it in the demo, so I can actually show the exact entry there. So this happened, obviously, and that's our high volume in the background, right? When I first opened these charts on this day, Thursday, right, this was US dollar interest rate decision. So we knew it was coming, and that's typically how it behaves. We knew it was going to, could completely change the story of what was going on in the charts, obviously, and going forward after that. It was late in the day, so it was just, let it happen, let it pass, right? We knew it was coming. So I open the charts here in the next day, and I see, okay, obviously it's high volume. The result of that is lower prices, and the lower prices don't appear to be really hitting any high volume. So we have this, clean sort of downward momentum. Again, high volume with the result of lower prices. Typically, you're looking to continue to go short in this situation. There's no high volume strength, or is there, right? And you're looking for weakness, you'd maybe drop some fibs, right, and look to sell. Now, in this case, at first glance, I figured that's what I'm doing. Then I'm looking at these guys, say, okay, how much strength is coming in? Let's take a look. Looking at this and going, okay, wait a second. Now, that is Asia session, right? Look at the time of day there. And it's, again, this is the unusually crazily high interest rate decision volume. And if we back out, which I always do in these cases, I want to get a perspective on what high, low volume, normal volume is, because everything looks small after that, right? So if I mark that couple of volume points that we saw strength coming in, and again, a fake breakout pattern, strength coming in, even here, which was after the trade, strength coming in. So we're actually seeing accumulation here, but normally we would not expect to go long off of that, off of such a down move without some higher volume demand coming in, right? But again, now let's, marking the high of that high volume, right? You got to put news aside. Plenty of days never even reach that volume. Some days you have 1 hour, maybe 2, that ever reach this point. So it's in the high volume range, right? News aside, these are news spikes, which tend to be more extreme July, August, for whatever reason. There's lower volatility, and then the big stuff comes in and it whips things around. But many days don't even reach that level, right? Many days. And again, that's during Asia session. That's during low activity. So that tells me, okay, I'm looking at this going, this is not news, right? And this is high volume, very unusually high for this time of day, right? Now that we compare it to the background, it usually looks like this, like this, right? It's all the same time of day that we're looking at. So we get perspective on what this is. Again, this is not news. This is the opposite. This is when things are typically dead, right? So, okay. First thought is, all right, so I'm not going short, right? If anything, I have to believe the chart. Let's, take a look at the 5-minute, look at the details of this high volume. But we see a sign of strength, with the 2-candle pattern here. And then again, the fake breakout, which is a bullish pattern. This showed up again. And that was just into London Open. So let's get in there on the 5-minute and confirm that, right? I'm pretty much only using those 2 time frames for most of my information. 1 hour overview, and now the 5-minute. And it's August 1st. Let's get in there. So this was following the U.S. interest rate decision, which looked very strong for the U.S. dollar, which brought down the euro against it. But then, again, so there's the big news stuff, right? What really goes on there is a ton of buying and selling. Obviously it actually hit all this volume and didn't actually go very far for the first 20 minutes, right? So it's actually, just a mix of buying and selling. It's madness. I don't get in there. I have nothing to do with that. So we end up down here and we go, okay, going to the next day is likely bearish, right? We did see this happen off of the low price of all that stuff, showing some buying coming in to stop it. And that's actually the highest volume besides the actual start of it. Then we get into new low ground. As I say, new low ground is going to tell you about buyers the most out of anything. And that finally happens here, just to mark the low. So this is combing through the 5-minute to confirm what I'm really seeing, because things could appear different than what you expect. It could be a sign of strength on 1 hour chart and high volume, but then you go to the 5-minute chart and you actually realize that's all weakness coming in the upper part in the higher prices. Sometimes there is a mismatch. So, and to get to detail, this could be a mix of buying and selling through here, strength and weakness. Who knows, right? So to clarify it, right? And so here's the new low ground, and that's where you'd like that again tells you about buyers. If this volume did not increase, that would say a lot, right? We're just kind of free falling, right? And as we go lower and lower, this really threw price down quickly, this candle, and we see the reaction, right? That actually stopped it. Enough demand came in here, and that was confirmed as a sign of strength. You see the result. Goes to the 14 EMA to test for sellers, and they're actually not very active. So this is actually showing a imbalance in supply and demand. Demand active, supply inactive. And you know about the 14 EMA test for sellers, right? Many of you know that. And again, that's Asia session. That's normally when there's not much going on. So these buyers were almost, for lack of a better word, forced in. If they're looking to buy at that price and it suddenly gets dropped down there like that, well, there you go. Again, new low ground tells you about buyers, right? Let's do the next one, which is here. We do see strength as we're approaching, right? So I'm just going to go through the 5-minute, show all this strength, which convinced me to go long, because again, that was to the left and it's a little scary, right? What a down move. And then this happened, and now I'm looking to buy, right? But it turned into classic accumulation here. Again, low price, fake break, right? And all this stuff is showing. Now, these higher prices, again, are really revealing how much sell pressure, sell activity is, right? And higher prices are going to tell you about sellers, and there we have some. It's really insignificant compared to the amount of buying that we're seeing, right? Repeatedly, every time. And the entry is in here, which I'll get to. And then also just throughout the rest of the day, the stop loss was below here, so that wasn't an issue. But look at the volume there. Again, lower prices tell you about buyers. There's the strength, right? So this is very, very good accumulation. Very clear, very obvious. Here's some weakness that showed up here. They're all lower volume up there, and they're all really temporary, and then price just kind of sits there. It's not getting squashed on high volume or anything like that. So it really turned into immediately accumulation. So by the time we get to London Open, that is here. And that's when I start my live session and start doing my analysis. So at this point, I'm realizing, okay, I would actually go long if this 5-minute situation is matching the 1 hour, and it does. And then here we get this. Again, we're looking at this in real time, saying, as I just showed, the lower prices are going to, confirm or not if we're still in accumulation, if we get into new low ground here. If we move up or down, I was saying we're going to get some information, right? We'll find out about selling, about buying. So this happened, while we're in session. We got to see the fake breakout. Again, the strength. Being that we were into London session, it would have been nice to see something a little higher, but it worked. It was the highest volume of the session besides the market open spikes, which are always high. So relatively good. Of course, confirming with the fake break. And the next move is to get up here and test for sellers, 14 EMA area. And there's also this little fib, which is completely valid. That's sort of secondary. The main thing is that this 14 EMA is where I'm looking for the no supply, the low volume test. And we see that all through here. But we also know, and this fib is valid, nothing wrong with it. It's small, but it's correct. And we know that this is where, right, this zone and just above it, 618 overshoot, that's where the sellers could really show up. And there it is, right? Really no increase in volume. So it's constantly showing me the story of strong, confident buying, buying a lot, accumulating a lot, and sell activity is very low. I mean, this seems to be an obvious plan that we're going to start marking up, right? We just got to do some fake breakouts and, get all the buying in, absorb all this selling, and the timing has to be there. But it's written into here now. So again, so the entry was obviously right there after we had confirmed this low volume stuff and everything else, and we start to move up. I like to be convinced before I get into a trade that not only am I seeing strength, the whole background story, strength, lack of supply, but a markup style move. I could have entered immediately here, for example, right? It's confirming the no supply at the 14 EMA where I want to see it. It closes up. There's no high volume weakness coming in. That's totally fine to enter at this point. I'll zoom in. That's where it's already confirmed, which I said it real time. It's confirmed now. You could get in at any point. But if price is just sitting here, it's, what am I missing? First of all, nothing. Right? Price is not moving up without me. But I like to see not only is there lack of selling at this point, but I've talked about this in other videos in the course. They need to switch over and show me some aggressive buying, rather than just buying into these down moves. I want to see some markup style upward move, which occurred here. With this candle, I'm convinced, again, this is where we'd see weakness normally on a small fib. And, if we were going to continue to, you see this pattern to the left and do like another leg down here. Let me delete, right? Like this lower lows, lower highs. This is where the selling would hit. And there wouldn't be so much buying here. So obviously it's saying we're not doing that anymore. So I entered at that point, which was actually up here. That's how patient I was, which was really a difference of 4 pips from when I first could have entered to get this more aggressive style push up, right? So, patient on the entry. You could have entered anywhere in there. So if you know my method, you're learning it. This is really a typical situation, right? Now my stop loss was at 22, which is here, for a good reason, to allow for more fake breakouts, right? Because they happen all the time. I learned that lesson early on when I started trading these patterns. Well, we already had a fake breakout, so I can just put it like just below it, right? No. And go from the 1 hour point of view, like what is, this is what we're working off of. Support, support, support. And this is the fake breakout that we just looked at, the lowest point. So I'm allowing for this spring during accumulation, right? Wyckoff. Fake breakouts, I call them. And typically they're going to happen just before you actually start marking up. If you haven't done it yet, you'll get that, right? That's the old pattern. You get the fake break here, and then you're more successful. Chance is there of getting through the automatic rally and all that, which is here, automatic rally. So allowing for this fake breakout from a 1 hour point of view, right? It happens so much. Why wouldn't we, right? So where does price have to go to say this long setup is not looking any good? Beyond a fake breakout. It's not an exact science, but if you look at it, right, and it could have gone a little lower maybe. Beyond that, it's a real breakout. It's another leg down, and this whole situation would be canceled out, and I'd want to get out, which gave me about a 25 pip stop. It ended up moving, about 50 pips. So, and we, there's a fib there. We'll get to that. So, hopefully that is clear. And maybe if you're learning my method, you took advantage of that. Maybe the volume behind it threw you off. Maybe it was just too crazy to think about going long after such a move. But I had to believe the charts, and the 5 minute, being as clean as it is, that had to be there too to really convince me. That's about it. Oh yeah, so, and it finally went into Friday, 618 overshoot pattern, right? And this is, if you're long, what do you want to do for targets, markup areas? If you know how to trade, where you would go short if you were looking to go short, which would be in this area and up to the 618 overshoot. Once it breaks that, it's likely to continue. But this is going to tell us about sellers, right? Big time. If this weakness didn't show up here, I'm going to float on through, right? And probably get up to here on Monday. But that's a normal place where there was likely some profit taking Obviously, I did that too, and that's a very obvious spot where you get warned if sellers are coming in and it's a good target area. This was generally, obviously, the fib target area. Immediately, day of it went to 50 fib and hit some weakness. So these are targets that are planned out. 50 fib, generally in the zone of fake breakouts, and of course the 618 and the overshoot of that. So we all know that. So there was some profit taking, some weakness there. That's about it. So again, really a typical trade, but you may have not seen it because of that, and that's a good lesson to learn. Get that high volume out of the picture. I wish you could just erase it, and then you can get perspective on what you're actually looking at, and that could sneak right by you how high that volume actually was. We did get all this activity, which was that's non-farm, right? Yeah. That's why that's so high. Big news US was that day. So no, actually that was here. And these guys are just generally I think that was Euro news here. These guys that's the US non-farm on Friday, are generally high. So we did have some extreme, and plus in July, August, again, just in my experience, high volume news spikes, they go all over the place. But then we get back to normal stuff unless there's something really important again. But again, for July, August, this is like very rare, and I normally would take a break, but things have been good. So if you want to join the live sessions, I'm still doing that at London Open, screen share and voice. I'll put the link in the description. Make sure you're subscribed to the YouTube channel. Also, the course, of course, is available at still a low price. So if you're looking to get the course and learn this stuff, or you can go through my YouTube videos, which are free. You learn a lot. That's about it, guys. See what next week brings. What is it? 4 weeks, and we'll be into September anyway. So good stuff. All right, guys. Have a good one.